Welcome to the Q1FY22 earnings conference call of Laxmi Organics Industries Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Diwakar Pingle from Christensen Advisory. Thank you, and over to you, sir.
Thank you, Margaret. Welcome all the investors. Good evening, good morning to whichever geography you're from. Welcome to the Q1FY22 earnings call of Laxmi Organics Industries Limited. Before we proceed to the call, let me remind you that the discussion may contain forward-looking statements that may involve known or unknown risks, uncertainties and other factors. It must be viewed in conjunction with our business risks that could cause future result, performance or achievement to differ significantly from what is expressed or implied by such forward-looking statements. To take you through the results and to answer your questions, we have the top management of Laxmi, represented by Mr. Ravi Goenka, Chairman and Managing Director, Mr. Satyesh Nabar, Executive Director and Chief Executive Officer, Mr. Harshvardhan Goenka, Executive Director, Business Development Strategy, and Mr. Partharoy Chowdhury, the Chief Financial Officer. We will start the call with a prepared remark by Mr. Ravi Goenka, after which we'll go on to the Q&A. Over to you, Mr. Goenka.
Thank you, Mr. Pingle. Appreciate it. Very good evening, everybody, and welcome to our Q1 FY22 earnings call. I'm delighted to be speaking to you and to present a commentary on this quarter's performance and give you an update on the events of the subsequent period. At the outset, I must say that the second wave of COVID impacted the supply chain and the general operations, especially on manpower availability. Still, our employees' dedication and commitment helped us surmount the challenges, and we could turn in a strong performance this quarter. I thank my efforts. Some of the highlights of our financial performance: our operating revenues were at 690 crores versus 467 crores in the last financial quarter, Q4 of last year, registering a 48% quarter-on-quarter growth. Our EBITDA was 137 crores versus 56 crores of the last quarter, a growth of 146% Q-on-Q. Our EBITDA margin stood at 19.82% against 11.88%. And this is an expansion by almost 800 bits for this quarter-on-quarter. Our profit after tax on a standalone basis is 99 crores as compared to 31 crores in the last quarter, which is a growth of 216%. Our EPS was 3.74 compared to 1.34 in the last quarter. It would be interesting to point out that the EBITDA and PAT for this quarter are at 67% and 80% of the last fiscal respectively. So indeed, we have a stellar financial performance this quarter. While a lot of the investors might have a good understanding of our business, there could be many and some who are first-time attendees. For them, allow me to speak very briefly about our businesses. As you may know, we are primarily a B2B business, currently operating in two verticals: the AI business, which is acetyl intermediates, and the SI vertical, which is the specialty intermediates. Our upcoming FI, or the fluorochemical vertical, is under implementation. At Laxmi, we cater to a large variety of end consumers, specifically in the pharma, agro, flexible packaging, colors, pigments, inks, paints and coatings. And across these sectors, the domestic demand has been growing at double-digit rates over the last 5 years and expected to maintain trajectory over the next 5 as well, while the global demand is growing at a rate of 4 to 6% CAGR. We play a significant role in the acetyl intermediate business in India. Our company, along with its sister concern Yellowstone Chemicals Private Limited, is one of the largest producers of ethyl acetate. Our company has over 33% of the share of the domestic market, and we are the largest exporter of the product to more than 25 countries. We are a consistent supplier to Europe over the last several years, where we have a direct presence. We are also one of the largest suppliers of fuel-grade ethanol to the oil marketing companies under the oil blending program of the Government of India. Our specialty intermediates journey began with the acquisition of the diketene business of Clariant in 2010. Since then, we have increased our revenue more than 5 times, added 20 new products through our own in-house R&D, and expanded the volume capacity by more than 3 times. Presently, we remain the only player of this platform in India as we speak, and with a significant share of the domestic market. In this vertical, in addition to the sectors mentioned above, we also cater to the needs of flavors and fragrances and the polyester industry. Our latest initiative is in the fluoro specialty space. We acquired the assets, technology and other paperwork of Miteni SPA of Italy, and currently we are in the process of relocating this plant at our new greenfield site at Lote Parshuram in Maharashtra. This will introduce us to the world of organofluorine compounds and electrochemical fluorination. This initiative will bring in a library of new high-margin niche products and at the same time de-risk ourselves by reducing dependency on a few volatile raw materials and a single location operation. This is an R&D intensive initiative, and our plan is to have an additional R&D center in Italy, and this we shall soon achieve in the next 6 months to 9 months. This will be our touch point with the European innovator companies in pharma, agro and other segments. With this background, let me now elaborate on some of the key drivers of the growth for this quarter. Our acetyl intermediates business showed a smart uptick attributable to better realizations, and we capitalized on the market opportunity. This once again reinforced our confidence that we can achieve not only a cost pass-through, but even a much higher margin, even in the face of a severe escalation in input costs, while maintaining a high level of operational excellence. In the specialty intermediates, the growth can be attributed to both volumes and product optimization. Our SI business recorded the highest ever volumes this quarter and was helped by improved pricing levels as well. We have registered significant exports of the specialty intermediates, which we shall continue to consolidate. A bit of a setback, and as you may have learned, there were unprecedented flooding in the entire Raigad Ratnagiri districts of Maharashtra in the last week of July. We were not spared. Nature's fury devastated our specialty intermediate site and the entire MIDC of Mahad, and all the factories had to be shut down, the power lines were disconnected, and the entire area was submerged in water of different levels. We at our factory had water levels of more than 14 to 16 feet. While our acetyl operations were marginally disrupted, operations at our specialty intermediate unit have been severely impacted. The unit had to undertake a safe shutdown due to the ingress of high levels of water, the disruption of power, and a general flooding in the area. While there was no impact on human life and environment, damages brought about by the flood are quite extensive. Therefore, the specialty intermediate unit is currently under shutdown while the acetyls unit is functioning at nearly full capacity. We are assessing the damages and the insurance survey is underway. The restoration work will start as soon as we have a stable power situation. While we are insured adequately, including loss of profit, we expect that the performance of the specialty business will be impaired for part of this quarter. We expect some delays in the implementation of the ongoing capexes at our specialty intermediate site. However, the fluorochemical site has been unaffected, and the ongoing capex plans at Lote Parshuran remain on track. Despite an extremely challenging Q2 for the specialty business, we expect to achieve our fiscal 22 business plans, leveraging the robust performance of Q1. In conclusion, I assure you that as a team, we are strong and resilient, and we shall emerge stronger from this challenge as well. I am confident of the long-term strategy and growth aspirations that we are pursuing, and with your support, I am sure we shall be able to scale greater heights in the times to come. I take this opportunity to once again thank all our employees, customers, and other business partners, and you, the investors, for your support. And I will now pass on the mic to Mr. Pingle to throw open the floor for questions and answers. Thank you.
Margaret, you could go ahead, please. You could open up the lines.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Anyone who would like to ask a question, you may press star and 1 at this time. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Amar Moria from Alpha Accurate Advisors. Please go ahead.
So thanks a lot for the opportunity. Couple of questions from my side. Number one is, as you indicated that, the specialty chemical plant in Mahar got impacted because of the flooding. How many weeks of the production got impacted because of this, and when do we expect that, the plant will be running smoothly? That is number one. And then I have a few follow-ups.
So, I am Partha Roy Chaudhary.
Hi, sir.
Yeah. So, the floods happened between the 22nd and 23rd. Okay.
Mm-hmm.
And the level of water was very, very high. Powers were disrupted in the entire area, including domestic power, and even today the power is not stable.
Okay.
So the movements of the people inside to do the restoration work, the maintenance work, etc., is at a very slow pace. Insurance surveyors are there. So we have already lost about 20 days of operations, and currently we don't have an assessment in terms of when we can restart the plant at full capacity. However, given the configuration of our plants, it is going to start in a modular manner. We need to test the electricals. We are very heavy on electricals and instrumentation. We will have to take care of all the safety measures, which is paramount for us. And then we'll restart. I think we are not really able to tell you right now what could be a possible date. Even the loss assessment is not yet complete, Mr. Patel. Yeah?
Okay. So basically, sir, when you say that already 20 days of production is lost, or, are we having an adequate inventory so that we can at least, supply to our customers, and given the Q1 run rate, what kind of, what I'm trying to understand is that, what kind of seeing at the customer level, because you are the only supplier for this particular product, and largely then it is import.
Yeah. So the business has two compartments. One is the acetyls. our acetyls business, which is around 60%, as you may see in the investor presentation also,
Correct.
is unaffected.
Okay.
It is working at near full capacity.
Correct.
Okay. So that revenue stream is going on.
Correct.
As far as the specialty unit is concerned, that is what is impacted. Even the stocks are impacted.
Oh.
We have already started dispatching. Yeah, it was under a lot of water. We have already started dispatching material, good materials to our customers. We are rationing them. We are in constant dialogue with our customers. We are aware of their predicament as well.
Mm-hmm.
So my personal assessment is it should take another 7 to 10 days time for us to give any indication of when the supplies are going to resume, etc., etc.
Mm.
Of course, we shall supply material out of stock, whatever is good material available, and we'll reprocess whatever is recoverable.
Okay. And let's say if there is any shortfall, so will you be like, to maintain the customer relationship, will you be like importing the raw material and sourcing it to the customer?
Not as of now. That is not what our current thinking is. We'll see how to deal with this situation in consultation with the customers.
Okay, but at least you would be having 3 months of inventory for the specialty?
No, we don't have 3 months of inventory, number one, and we are not really looking at a stoppage of 3 months. Huh?
Correct. No, I'm just trying to understand that. Fair enough, sir. Thanks a lot. I'll come back in queue. I have few more.
Yeah. All right. Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management will be able to address questions from all participants, we would request you to please limit your question to 2 at a time. Should you have a follow-up question, please rejoin the queue. Thank you. The next question is from the line of Deepak Poddar from Sapphire Capital. Please go ahead.
Yeah, thank you very much, sir, for the opportunity. So just wanted to understand if we set aside this Mahad flood situation, so on a normalized kind of a situation, so how sustainable is the current performance in terms of margins or the revenue?
One of the ways of I cannot give you any numbers, Deepak. Okay, number one. Mm-hmm. But one of the ways of assessing this could be to sort of you have 1 quarter live. You also have trailing quarters, which are in the public domain.
Mm-hmm.
So if you take the trailing quarters and make some adjustments for the current reality, you should be able to arrive at a number which could be quite close. I mean, this is a methodology by which you can actually get an answer to this question. Current run rate is, of course, very high. Yeah.
Mm-hmm. Fair enough. Yeah. Okay. I understood. Thank you.
Thank you. The next question is from the line of Ankur Periwal from Axis Capital. Please go ahead.
Yeah, hi sir. Thanks for the opportunity. Just continuing with Mahad there. So, given the significant impact on the SI front and our revenue contracts with the customers, how do you see, this overall, the business overall shaping up? So let's say, presuming, as you rightly mentioned, maybe it will take a couple of days or maybe a couple of weeks to sort of, start the facility on a modular fashion. But let's say, if I take a hit of the entire month on a worst case scenario, starting next, month onwards, will there be a loss of, revenue for this 1 month, or we should be able to recoup in terms of the volume uptake in the coming months once things stabilize and we restart our operations?
One line answer would be, Ankur, we'll be able to recoup. Okay. Now, are we going to recoup full 100% or are we going to do 80% or we are going to do 120% is a matter which will probably emerge at a slightly later date. In the contractual supply also we run with certain headrooms for certain exigencies, but not this kind of exigencies, of course. Yeah?
Okay.
So on an annualized basis, we are not seeing too much of volumetric loss, Ankur.
Sure. Okay. That will be helpful. And sir, secondly, from this quarterly performance perspective, now obviously, very strong performance there. Just trying to see, what part of, the business clicked significantly here. Was it largely led by the spreads there? And, as we heard earlier in the call, in the management commentary, that higher volumes as well as pricing also benefited here. So will it be possible to give some qualitative sort of analysis there?
Both, Ankur. So let me address SI first. In the SI, we had really strong volumes in the quarter which has gone by. We produced at very high rates. We could fulfill all the customer demands which were at a higher level. We had new contracted products with new contracted customers which we started catering to. And for the first time, we have 20% of our SI sales coming out from exports. Okay. So therefore, this is on the SI side. We also had price advantages or margin accretions because the acetic acid price was on an upswing. So these two events helped us in the SI. In the AI, I think we have very successfully managed the escalation in the raw material costs, and we have been able to have a pass-through not only of the cost, but there were higher margins which were available. So these two are the primary reasons. In acetyls, we didn't have much volume advantage.
Okay, yeah. So the volume advantage was largely led by SI.
Yes.
Okay, and sir, lastly, if I may squeeze in, your sort of sense on the acetyl space, the spreads overall globally, and your thoughts in terms of incremental supply coming in, sustainability of margins there.
I think I'll give you a negative assurance. I am not seeing the margins crashing down, Ankur. Okay. We are already about 40 days into the current quarter. So the margins will hold up at reasonable levels. Of course, they are not going to hold up at the levels of the last quarter, but they will hold up at reasonable levels.
Sure. That's helpful, sir. Thanks a lot. And sorry, please go ahead.
Yeah, that's my personal sense. I mean, it's not a guidance.
Yeah, sure, definitely.
It's information
Thanks,
is available in the public domain, so.
Yeah. That's helpful. Thank you, sir, and all the best.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question at this time. The next question from the line of Shanti Patel from Shanti Patel Investment Advisors. Please go ahead.
Sir, good evening. I joined little late, so I don't know whether my question will be repetitive type or not. Now, what is our market share in respect of various verticals in which we are in India?
See, our overall exports in the current quarter is of the order of about 19 to 20%. Yeah?
Right.
So 80% of our sales is in the domestic market in this quarter.
Correct.
This could vary between 80 to say 70%, depending on the relative margin profiles, etc., etc. You may also take into consideration that we have certain amount of traded sales. What I am talking about is sales out of manufacturing. Approximately 10 to 12% of our top line is through trading. So you need to make an adjustment for that.
Sir, my question was, what is our market share in respect of
market
products?
I am sorry. So the market share in the specialty intermediate space is between 50 and 60%. and in the acetyl space, it is between 30 to 35%.
Okay.
Yeah?
Okay. Thank you very much.
Thank you.
Thank you. The next question is from the line of Bharat Shah from ASK Investment Managers. Please go ahead.
Just one question. One of the ponderables has been that despite Laxmi Organics strength in the two areas that it operates in, and with very strong customer relationship and a fair degree of domination, margins and the profitability have not reflected that, and therefore return on capital employed also has not fully mirrored the strength of the business and the strength of the chemistry and the customer relationship. First quarter that has gone by has given the first time a kind of a glimpse as to potentially what could exist for Laxmi. So, how much of what has happened is structural and on a long-term basis that will remain and may probably further improve as we get onto that journey with scale and etc. Some of it may be for the time being, for the quarter gone by due to favorable circumstances. So that may or may not remain, but structural part, how much has been and how much more can it kind of improve over a period of time, so that all that also eventually reflects into superior capital efficiency.
So, Bharat bhai, I'm Parthura Chaudhary. So, there are 2-3 parts to this question. One is when you look at the capital employed of Laxmi today, actually a lot of capital is deployed in the new initiatives and the capexes which are going on. That's point number one. In terms of structural shift, and where we see certain permanencies in terms of revenues and margins, etc., is the volume growth of our current specialty business. These volumes have grown based on customer demands, customer contracts, and these are assured growths. As far as the acetyls business is concerned, my sense is that there is a growing demand because of the demand pool arising out of the consuming industries, which is pharma, agro, packaging, paints, coatings, etc., etc. As a result, there is a demand side growth which is getting converted into margin expansions. And if I plot these numbers over a fairly long period of time, this becomes very clear. But the spike that is there because of the input costs going up and therefore the selling prices are going up and then they are correcting, this is something which is not sustainable over a long time. But to get an assurance or a clearer picture on that, I think we need to see at least over the next, say, 3 months and see where eventually it settles.
Let me put that question in little alternate fashion. Long-term improvement in the profitability of a business would depend upon the strength of the chemistry, the cutting edge involved, of course, the demand and factors which may favorably or unfavorably affect scale, volume, and new processes that we may have evolved, as well as whatever efforts at the cost efficiency and all that. So clearly the kind of margins that Laxmi Organic in the past had were not fully reflective of the strength of the business and the strength of the chemistry and the customer relationship. The margins in the first quarter does give some level of glimpse of the kind of strengths and the advantages that Laxmi as a business has built over a period of time. So my question is, leave out the short-term picture. I mean, in the short run, what has happened is not all that critical. The customer special demand factors, temporary pull of the prices or whatever, on a more longer term over journey when we think about, given the character of the business, the kind of margins that Laxmi should enjoy should be way higher than what it has been in the past. So at least that is my belief. So I'm trying to understand how much of that is there.
Sure, Bharat. Well, Partha, let me try and take a crack at this. So Bharat, Harsh over here.
Yes.
Perfectly, what you said is something we recognize as well. And the two businesses that we have today operate with different philosophies. The cost and supply chain efficiencies, which talk about the large scale and volume, primarily come from our AI business. And as you rightly mentioned, some quarters can be better than other quarters. But what is more structural for the kind of base that we have established is going to be largely in the SI and FI segments. So we have made several initiatives over the last, I would say, 12 to 24 months prior, which is what is resulting in this kind of SI performance and increase in volumes, etc. More of this will happen as we're able to execute our CapExes, which are already underway. And similarly, you would see it in the FI. And of course, you have the third element of product mix change, which will also come about in the SI segment in the coming quarters. So that's how we are looking at the business. We understand that the AI would continue to have a demand growth at India consumption sort of patterns, but the specialities and the FI would have a much more significant growth, and that's what will take up our capital in terms of investments.
Harsh, that's very helpful. Just one last thing, if you can help me with that.
Yeah.
So basically, what I understand based on what you say, that AI, there may be relatively more degree of variation in the margin in the near term based on topicality of the situation, which is fine. But SI and FI would be on a structurally more sustained, more predictable, stronger journey. And therefore, if we, let us say, leave out the current quarter superior margin and all of that, if we leave it out of the computation and recognition, if we, let's say, look at 2 and 3 and 4 years ahead, this is not going to be flesh and pain kind of a performance on margins. It's something that should sustain and hopefully will get better in order to reflect the realistic superior return on capital employed.
Exactly. And just to give you a number, in the last quarter, we completed about 65 crores of CapEx, which again, all of that primarily in the specialties / FI segments, which is what talks about moving into this direction.
Cool. Thank you, Raj. Thank you so much.
Thank you. Thank you, Bharat.
Thank you. The next question is from the line of Dhruvam from HDFC Fund. Please go ahead.
Yeah, thank you so much, sir. Sir, just a similar question to the earlier one, but probably focusing more on the short-term things. So, firstly, on the first question was on the AI business. So if you can help us understand what's the market shape is, just to better understand the business dynamics. You know, what is driving such high margins, such high pricing that you are able to pass on the RM cost? Is it extremely high demand? Is it some of the capacities have closed? Is it inventory benefiting? Is it probably the shipping cost which is probably benefiting? Or is it something else, or a combination of everything? If you can help us better understand the business dynamics.
Harsh, you want to take it?
So Dhruv, I'll say a simple line. I don't think it would be fair to isolate it to any one factor, Dhruv. And as mentioned previously, we've tried to build out this business in a very differentiated manner, which allows us to retain value irrespective of raw material or finished good prices. And that's how we look at the business, rather than try to play the market on either side.
Mm-hmm. Sure. No, I was just trying to understand what are the dynamics that play in the industry, which can, drive it on the upside or the downside or on a steady state. So just trying to understand what has played right now that the situation is such.
No, I completely understand.
It helps us in understanding the business on an independent basis better and take a view better. Yeah. So that's the only idea I was trying to understand from.
Sure. I think it's multiple factors, Dhruv, in my opinion. It's got to do with, I would say, largely supply chain efficiencies from our end to dispatching, reaching a customer. That's what enables this to a large extent. Plus our internal process and policies, which we adopt and live by, which sort of make this business consistently throw out cash, just the AI business. So I think that's what defines it. Partha, Satya, you want to add anything else?
See, I mean, for me, Harsh, the one sentence answer is one has to look at the industries that we are catering to. All these industries, whether it is pharma, agro, packaging, printing, ink, whatever, all these industries have been growing at a double-digit rate over the last 5 years, and they are going to grow at that rate. I think there has been a shift in on the demand side mathematics, which is creating the pull for this business. Mm-hmm. Ethyl acetate is also replacing several, these toluene, MIBK, etc. based solvents. So there is a replacement which is happening. All this is eventually culminating into the demand side impact, according to me, in addition to everything that you said.
Got it.
Yeah?
That's helpful a bit. And so secondly was in the SI business. Now, you said that you have exported about 20% of sales this quarter. And earlier, if I recall correctly, you were largely a domestic player. So is it something new which is, if I understand correctly, is this something new which has come can it, these export volumes, can it grow significantly? Some initial thoughts that you can speak on?
Sure. No, Dhruv, I think even at the time of IPO, when we gone about, we had specified this, that one of the strategic new initiatives was to expand into certain new geographies. So this has been coming, or not coming, but work in progress over a fairly long period. Again, 18 to 24 months is when we started this activity long ago. And to get qualifications, product, the usual process to get win a customer's trust is what started long back, which is what resulting in this. Of course, this will grow further. We do expect some of the new plants coming up to be primarily export-driven as well, which will further add to this overall percentage.
Got it. Sure. Yeah. And so one last question, if I can squeeze, is the ethanol business you spoke about. What is that share of a total business? And I believe there is a new ethanol policy. Do we benefit from the tailwind from that policy?
Yes, we do. Currently, the ethanol business share is very low in our business. But of course, this policy is going to help us in a big way.
Thank you. I would request Dhruvam to rejoin the queue for follow-up questions. Request participants to limit your question to 2 at a time. The next question is from the line of Dhaval Shah from Girik Capital. Please go ahead.
Yeah. Hello. Yeah. So a couple of questions. So first one, if I heard it correctly, you mentioned the acetic prices were on the upside and that benefited us in the SI business. Did I understand it correctly? Is that the reason?
Yeah, because acetic acid is a raw material for the SI business as well.
Mm-hmm.
Yeah.
Correct. So they were so that's a raw material. So and that's why the finished prices were also higher.
Yeah. See, the escalation is in times. The escalation was not in percentage. So it has not been it's not gone up by 20, 30%. It's gone up by 3.5 times. So it is going to impact.
Okay. So that's where we got the entire pass on, and there was an expansion in margin on the SI business. Okay. So second question is, so as on FY21, we were around 84% utilized capacity in the AI business. And now in the first quarter, we see a lot of operating leverage also playing out. So is it all majorly coming? So as you mentioned, on the AI side, it was more of a pricing benefit which we had, and on the SI side, it was a lot of a mix of margin and operating leverage here.
No, not margin and operating leverage. It is volume and operating leverage and pricing. All three eventually culminated into the results which we've seen now.
Okay. So would you share the utilization levels of the SI business?
Not really right now, because we don't run that math, to be very honest.
Okay.
Because a lot of it actually depends on the product mix. We run that math once a year when we do the business plans, etc. But we don't really run it on a monthly or a quarterly basis. So it's a function of the product mix as well. Yeah.
Okay. And sir, if as the acetic acid prices from like 30 rupees a kg went to around 90 in May, which is what you're saying. So now if the prices go southward, then what is the impact?
Then some of the prices correct, but the question is about the margin.
Yeah, the spread, right?
Yes. Yes.
Okay. So the spread.
Sorry to interrupt you, Mr. Shah. I would request you to rejoin the queue for follow-up questions. Participants, please limit your question to 2 at a time. There are several others waiting for their queue as well. Thank you. The next question is from the line of Jignesh Kamani from GMO and Company. Please go ahead.
Yeah. Hi, Partha. On the SI business, we are planning to working on 2 or 3 new products. So was there any revenue contribution from the new business meaningfully in the first quarter, or mainly growth in the volume came from the export?
No, there were some new products which were in a very small way sold last year. They have picked up speed in this last quarter.
And on the domestic, how is the volume growth in the domestic SI business, or it was almost flat and main contribution was from the export?
So, Jignesh, the domestic growth in terms of demand and volume is there even in Q1, and specifically to do with the SI. Of course, in AI, the domestic growth we're seeing a lot more.
Understood. Sure.
Thank you. The next question is from the line of Alisha Mahavla from Envision Capital. Please go ahead.
Hi, sir. Good evening, and thank you for taking my questions. I want an update on the FI business. So is the new plant on track? Are we expecting it in Q4? And any indication of how we're expecting it to ramp up in year 1, 2, 3?
Harsh, you want to go in?
Sure, Pankaj. So, Alisha, let me just simply put, we were lucky that the site at Lote was not that impacted by the flood, and structural fabrication, etc., could continue at the site. We currently, I think, have more than 250 people odd working at the site in India, and I think there are about 70 people odd in Italy, which are busy dismantling the site over there. So we expect the containers are have moved from the site itself, of all the plant machinery, etc. And we are still on track for a last quarter start. With respect to your second part of the question on the ramp up, we are targeting 70% of peak, say in year one. Though that might be a little aggressive. That's the internal target we are taking. We will see where we reach. We are already in touch with several customers. Customers have visited our sites, already visited our pilot plants to get the confidence that we have we've absorbed the technology and ready to produce.
Sure. And what is the total capex we're doing? I know we did 100 million last year. And how much are we looking to do this year to complete this plan? What is the total capex?
So the FI business should take up about 270 to 80 crores total earning.
And will you be comfortable sharing what is the expected asset turn in this?
So FI, go ahead, Martha.
So it should be 1.2, one of that order. It will depend again on the product mix. And the asset turn will undergo change between year 1 of operation and year 3 of operations. Okay. And if I may add 2 more sentences beyond what Harsha said, you see, there was a time when the business plan was actually running behind the project implementation. Today, the business plan visibility is more than the project implementation visibility, because there has been a complete travel restriction and our teams have not been able to travel to Italy, which is actually coming in as a handicap for us just now. I think we need to keep this in mind. Yeah?
Understood. And so my last question is on the capex that we're looking to do in the SI business. You did mention that while we do understand there's a delay because of floods, what is the percentage capacity that we're looking to increase there? And before floods, when were we expecting it to come on stream?
Sorry, did you mean the SI business, Alicia?
Yes, the SI business.
Okay. No, so initially, Alicia, we had planned for our plants, the 2 major capexes going on to be commissioned within this calendar year, so in the latter half of this calendar year, but that might get further delayed. That damage assessment of all whatever had reached plant and was submerged in water is currently going on.
And what was the capacity expansion we were looking for this business, for SI?
So we don't talk about volumes or product in this, but there were 2 specific plans for contractual requirements.
Okay, thank you.
Thank you. The next question is from the line of Shanti Patel from Shanti Patel Investment Advisors. Please go ahead.
Sir, my question is, taking into consideration all the factors and the present prevailing situation, what will be the approximate turnover for the current year, that is 21-22? And will you be able to maintain the margin which we were having in the past?
So I will take that. To be very honest, you have seen the disconnect between the top line, bottom line in Q1, right? Okay. So that is the business which we operate, number 1. And on top of that, we have the floods. But as our chairman, Mr. Goenka, had mentioned, we will still continue to drive our business plans, which we have finalized for ourselves in the beginning of the year. And as I had responded to Ankur, we are not foreseeing any significant volumetric loss over the full year. So I think this is the indication which we can give you.
No, sir, that is right. Quantitatively, you say that it won't be less. I mean, just a rough idea that it won't be materially less as compared to the last year, correct?
No, I will not comment on this. I have a problem with this material word, so you have to run your math.
Now, secondly, no, fine. Secondly, the price of our product, they are, I mean, as compared to last year, they are, I mean, what is the trend? And what you, because of your experience, what you can say about that?
In my the experience has not held us in good stead in the first quarter. Okay, the first quarter numbers are. So I think we'll need some. I mean, we'll have to see how the next 2 to 3 months pan out.
Correct.
Then we'll probably have a sense of how the year is going to look like.
Okay.
Yeah.
Okay. Thank you very much. Thank you.
Thank you.
Thank you. The next question is from the line of Nitin Agarwal from DAM Capital. Please go ahead.
Hi, thanks for taking my question. Harsh, just on the SI business, I think very qualitatively look at the business outlook for the next 2 to 3 years. I guess one change which we've seen happening in the businesses, exports as a proportion of the business are going up, right? I mean, qualitatively as a business, what other changes do you see happening in the profile of this business, apart from the volume gains when we look through the next 2 to 3 years?
So, hi Nitin, 2-3 things that we've been planning which are fairly simple for our business. I think export markets for existing and new products was the first thing which has now started to play out in the last quarter. The second thing would be the launch of a few new products which is currently undergoing CapExes. And the third is contractual business. So as a whole, the percentage of our contractual business will go up, making this business a lot more sticky.
And on this last one that you mentioned, the contractual business, these are what? So typically the business that you're envisaging is business which is like a dedicated business or that dedicated products that you do exclusively for certain clients, or what would be the nature of this business?
So, I mean, in the classic term of a contract, there is a commitment from the customer side for a certain product at a certain volume over a certain time. Those will usually be on a longer term basis. We classify these as anything more than 3 years. So we are looking to push this more and more to that mark. And that's what will change the way the SI business outlook will. We are trying to drive this rather, let me put it that way.
And aspirationally, where would you see this proportion be for the business, say in 3 years?
I won't give that number out, Nitin, for obvious reasons. Yeah.
Okay, sure. Thank you.
Thank you. The next question is from the line of Ashish Singh, an individual investor. Please go ahead.
Good evening, sir. First, congratulate you for excellent numbers. Most of my queries has been answered. Just one is left. I just wanted to understand what is the impact of the container shortages which is going on our business.
We do not actually export in containers. Most of our cargo are liquid cargo, so they go in ISO tanks. And we have also been facing these challenges, but we have been able to manage so far. Freight rates, as you know, have also shot through the roof, but then we are living with it like everybody else.
Just a continuation, are we able to pass that increased freight charges?
So let me put it in two perspectives. I think on the running business side, yes, we are able to pass those on to our customers. However, on the capex front, there would be some escalation shipping costs which is moving our plant from Italy to India. So that assessment is on, but this is how we view the container and the shipping issues globally.
Thank you, sir. I wish all the best.
Thank you.
Thank you. The next question is from the line of Neil Halbe, a retail investor. Please go ahead. Neil Halbe, your line is in the talk mode. You may go ahead with your question. May we request you to unmute yourself and proceed with your question. Due to no response, we'll move to the next question, which is from the line of Bharat Shah from ASK Investment Managers. Please go ahead.
Yeah. If we, either Partho Saab or Harsh, if we take a look at our business if 3 to 5 years hence, what are some of the things which are not visible today or visible only partially, but over this time frame can change in for better the character, the strength, and the quality of our business, not just in terms of the growth rate, but also in terms of the character of the business. Say over the next 3 to 5 years. It may maybe only partially be realized or partially visible or not visible, but something that excites you in terms of changing the complexion of the business over time.
Sure. So, Harsh, you want to take it first?
Yeah, I can start first. So Bharat, I think there are two primary trends that excite us a lot. When we speak to customers and they are eager for us to grow. These are typically all international based customers in various ways and not doing classic Me Too, but really going up the innovation value chain using Indian scientists, technologies, etc. That really excites us, and we have seen that with specific technologies, which we've been able to create technologies that don't exist anywhere else in the world, and that's what excites me personally. The second part is on the FI business. I think there are some parts of the FI business which have a very, very high end of technology which have never been part of the Indian chemical space. Leveraging this into a completely new industry is where we are seeing. It will be a small part in the first year of our FI portfolio, but offshooting that and making that exponentially grow is what excites me, Bharat.
Sure. Partha Saab?
Bharat bhai, I am very audacious in the sense that if you look at the fluorine industry, Navin Fluorine came in 1967. Everybody else came in 1990-91. They have reached a point where they are today in 30 years. And our starting block is far ahead of them, Bharat bhai. That's my personal sense. Whatever we have got from Miteni gives us a solid head start. And if you ask me, if we don't really do a blunder, then we'll do really well, Bharat bhai. You look at the acetyls business that we have. It is a solid business. It's a world-scale business. We are 7th, 8th put together in the world. And then we have the SI business, which is housed alongside that. So I think we have a great combination. We need some time. We are new kids on the block. We've just been, getting into visibility. We use these sessions, these questions as our learning sessions, as feedbacks from people who are experts and entrenched in this space. And that's what excites me, Bharat.
Sure. And I'm just being greedy, but any comments from Raviji?
No, Bharat bhai, I think clearly we are putting all our bets, and we are all in the chemical sector is going to see a unbelievable, unprecedented capex cycle. And I feel that our company is going to play one good role in this capex cycle and take advantage because of our own skill sets, our execution capabilities, and our networks into this industry.
Sure. Thank you so much. And therefore, I presume the transformation that we are talking about is not merely due to external opportunity changing. Of course, that is required. But internally also, we are transforming ourselves in order to match up to that.
Absolutely, Bharatbhai. Absolutely. See, we have, Bharatbhai, taken 30,000 square feet of R&D space just a few months back during these times. Our capex outflows are going unabated. We are batting an eyelid to sort of, rethink. So we are really moving at speed, and I think we'll do well, Bharatbhai, God willing.
Fantastic. All the best and congratulations to entire team and to Laxmi Organics.
Thank you, Bharatbhai.
Thank you, Bharatbhai.
Thank you. The next question is from the line of Tanuj Kiani, an individual investor. Please go ahead.
Yeah, all my questions have been answered. Thank you so much.
Thank you. The next question is from the line of Amar Moria from Alpha Accurate Advisors. Please go ahead.
Yeah. So thanks a lot for the opportunity again. So this question is for the Harsh. Harsh, sir, wanted to understand, all our plants are largely located into Mahad. So this is a kind of a single location risk. So going forward, any new capex which we are planning, are we planning to diversify the location from Mahad to somewhere else?
No, indeed. I think the first one is in our fluoro site is not in Mahad, strategically speaking. It's in Lote, different geography completely. And that was done with a strategic intent. I think the next round of capexes, etc., would also have a similar thought process.
Okay, but then we will be largely doing all our new locations also in Maharashtra. I mean, any plan to move from this location to somewhere in the Dahej or Gujarat, something like that?
I wouldn't want to comment on that right now until something is concrete. Maybe a little early to say. If and when the appropriate time comes, we will inform you.
Okay. Thank you, sir. Thank you.
Thank you. The next question is from the line of Rohan Gupta from Edelweiss. Please go ahead.
Yeah, hi sir. Good evening and thanks for the opportunity. Sir, this is just a further elaboration what you just mentioned on the Bharatbhai's question. Sir, you mentioned that on fluorine-based chemistry, definitely your company have started and have bought into this business from a different scale altogether, while there are leading players in that business from quite a long time. So just can you give a little bit more on this, your input in terms of our capabilities, chemistries, and our science connect, and when we are competing with these old players like maybe Navin SRF and GSL Vizapur, I mean, when we are dealing and competing with these kind of players, established players in the market, and what edge we have that help us in getting the business from the customers, or it is just only ample opportunities which is just offering a business to us. So if you can just elaborate a little more on that.
I'll start. So the first thing, the intent of getting this is not to compete with any of the existing players in this market. I think what Partha was trying to refer to was the speciality fluorine nature in general and how companies have come up. We've been lucky to jump a part of the learning curve through our acquisition. The second, none of the products that we're going to be starting off with compete or have been produced in India before. So there is adequate market for in the fluorine space, and we are looking and choosing several pieces of that, what was made by Miteni before, and where we believe we have a competitive edge.
So, sir, you want to say that there is enough opportunity for everyone without getting into each other's space, and in the fluorine-based chemistries and the product basket which we have selected, we are not going to compete with any of these existing players.
Yeah, by and large, yes.
Okay, sir, a little bit more if you can just share on a fluorine-based chemistry. If you have an industry-related data, that what kind of opportunity size and the product basket which we are getting into, and the processes in which we are getting into over next 2 to 5 years, if you can just give what kind of size of those products, those markets can be, because you said that right now none of these Indian players are doing those kind of product baskets. So I just wanted to understand that when you are entering into this opportunity, and what can be the size and scale of that product basket. If you can just give some thought on that.
Harsh, you want to go ahead?
Sure, Partho. I don't think we talk product-wise, but the market size is more than 4 billion in terms of just our addressable size.
So, sorry, sir, I didn't get the number. How much you mentioned?
$4 billion.
Sir, can you repeat again? I'm sorry, I'm not getting that number.
It is 4 billion.
Okay, sorry, sir. 4 billion. Okay.
Dollars.
Okay.
US dollars.
Yeah. Right. Okay, and so $4 billion is the size of the product and of the chemistries or in which we are getting into, and right now none of these products are manufactured in India, and mostly it is going to be the import replacement opportunities or maybe export opportunities for us.
Both.
Okay. That's pretty helpful, sir. Thank you so much, sir. Thanks a lot.
Thank you.
Thank you. We'll take one last question, which is from the line of Pallavi from the Consulting Point. Please go ahead.
Yes, I just wanted to understand in terms of ethanol, what would be the capex and what percentage of it is made in-house currently?
We produce ethanol. Are you talking about the oil?
Yeah, how much?
Yeah, ethanol?
No, so how much? Yeah, you produce ethanol, so you use it also. So how much is outsourced in terms of your requirement? Do you meet 100% in-house, and do you also buy from outside?
No, we do about 20% of our requirement in-house.
Right.
70 to 80% is still bought out.
Right. So would you be taking that percentage up, and what would be the capex for ethanol in?
We don't have a laid down thought on the table just now, Pallavi.
Okay. Right. That's all from my side. Thank you.
Thank you. As there are no further questions, I now hand the conference over to the management for closing comments.
No, thank you very much, Margaret, and thank you everybody, the investors, and just want to assure you that Laxmi is a transparent company, and we will share with you updates as we go along. We have aspirations to grow, to become one of the many respected global chemical specialty companies in the world, and it will take your good wishes, and we look forward to live up to your expectations. Thank you.
Thank you.
Thank you. On behalf of Laxmi Organic Industries Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.